Hello, and welcome to our webcast. I'm Amy Pendergrass with Moss Adams, and I'm going to get us started for today's session, Key Insurance Challenges for Wineries and Vineyards. The presentation you are about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances. And before we begin, I'm going to play a brief video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement, or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key.
All right, and now it is my pleasure to introduce today's moderator, Bill Vyenielo, business consultant here at Moss Adams. Bill has worked with clients in the wine industry for more than 25 years and has solved operational challenges for vineyards and winery clients since 2006. He works with owners and managers to successfully develop and manage their winery operations and build their brands, providing guidance in strategic planning, sales and marketing, and winery and vineyard production and development. Bill, the floor is yours.
Thank you, Amy. Good morning, everyone. We have many wine industry clients in California as well as in Oregon and Washington. So we're very aware of the major increases in the cost of insurance and the reduction in availability of insurance to wine businesses in these regions. This has largely been the result driven by the wildfires and the increased incidence of wildfires in these areas. Insurance carriers have incurred major losses. Some have decided not to insure businesses located within particular geographic zones, and they've raised insurance premiums, and we're hearing 3 times up to 5 times premiums, as well as dramatically increased deductibles. So it's not just a wine industry issue. This is an issue that affects most businesses and industries across the West today, but today we're going to focus specifically on our wine industry. And I'd like to introduce our panelists. Liz Bishop, Executive Vice President of Heffernan Insurance Brokers. Bill Smart, Vice President, General Manager at Lambert Bridge Winery in Dry Creek. And Debra Costa, the Senior Vice President and Vintner Practice Leader at Heffernan Insurance Brokers. They're based in Petaluma. So I'm going to start off with questions really for winery businesses. This is really for you, Bill. How has the tightening in the availability and the affordability of insuring your property and facilities affected your business, and what decisions has that driven?
Well, good morning, everyone. Bill, thanks for having us and Moss Adams team, and it's great to be here with everyone this morning. Lambert Bridge has been in business since 1975, and so we're certainly not the new kid on the block here on West Dry Creek Road in the Dry Creek Valley. But to come directly to your question, Bill, the answer is significantly. The insurance market obviously has significantly impacted wineries, growers, and all manner of business on the North Coast. And our winery has, been impacted as well. And so, I think what we've seen is we've seen significant rate increases year over year. We've seen a unfortunate reality, which is a lot of carriers seemingly pulling completely out of the marketplace. And we've seen a just kind of a sea change in how seemingly carriers perceive businesses and their overall insurability. And so, we are one of the fortunate ones. We were able to get renewed in this 21-22 calendar year. Our renewal is a little funky because our renewal date occurs over the summer. So, but quite honestly, we feel fortunate that we were even able to gain coverage this year, Bill.
What changes have you made, or have you implemented some new procedures as a result?
Yeah, I mean, I think, obviously the big story with regard to our property in particular is that of wildfire. And so, going all the way back to 2015 in the huge fire in Lake County, this region has year over year been impacted significantly by fire. And then, we had the Tubbs fire. There was the Camp Fire up in Paradise, and then in 19 we had the Kincaid Fire, and then really after the Kincaid Fire was when we internally started having conversation around what we needed to clearly address it, obviously from a fire strategy standpoint. And so we came together as a team and said, what does our fire strategy need to be? And I came and believe I had to have a fire strategy. But that's the reality. And so, we looked at we looked at the property. We looked at the orientation of the slope behind our property. We looked at where we are on West Dry Creek Road, and we started to devise a plan. And so in January of 2020, in January of 21, I'm getting my years confused here because they all sort of run together. In January of 21, we had a very large brush clearance and really fuels reduction project completed here on property. And that was roughly 21 acres of work that was about 2,200 man hours over the course of about 45 days. And so that fuels work was really, the thinking was that's our first line of defense for how we can further protect Lambert Bridge and our assets. And the hope is that in doing that work, that fuels work, that we would be in a better position during our renewal to, for the insurance market to look favorably upon that work that's been done. And so not only did we do the fuels work, we kind of took it a few steps further. We developed a map of the property that's GPS based, and where a fire department from Albuquerque, New Mexico can scan a QR code, and in a matter of moments can have a visual of all of the work that's been done on property, as well as all of the gate codes and all the other turnaround points, and so that they know they could confidently defend the winery in the event of an active fire on property. In addition to that, we interface with local fire departments and various leaders within CAL FIRE to let them know of the work that's been done, and really just tried to be transparent as possible with what we've done, because we really do feel that this work was critical to not just the preservation of Lambert Bridge, but also our neighbors in the event of a fire. It's really about protecting the whole valley, not just us. And so, I guess fast forward to renewal, and I think that there's sort of two tracks here, right? There's one is we feel really good about the work we've done. We obviously hoped that at renewal time, the carriers would look a little more favorably on the work that's been done. However, and I know Liz and Deb can touch on this a little bit more, but the market is so challenging right now that it ultimately didn't make as big a difference as what we had hoped it was going to, in terms of how we were viewed by the various carriers. So,
well, it sounds, really, you're a poster child for being progressive and taking the initiative to really protect your property and mitigate the risk of fire. Liz and Debra, what about, this is a great example of what Lambert Bridge Winery's done. What have you been seeing? How can winery or vineyard companies best demonstrate to an insurer that their business is a safer risk to insure?
Yeah, well, very good question. And, I want to applaud Bill at Lambert Bridge for the work that he's done, and the whole team coming together to commit to that 20-acre clearance and all that. That actually ends up mattering a bit more than it may feel when you get your renewal bill and when you got your renewal. People that didn't do much didn't get insurance, and the people that did something got 5 times the rate. The people that did the kind of work that you did still got probably a 2 times or maybe 3 times, and you potentially got adequate, I say adequate, but reasonable limits that really actually end up picking up the majority of what your exposure is when you look at your total values at risk. And so as much as it may seem like, my gosh, I just spent all this money to spend even more money on insurance. How crazy town is that? I was looking for a discount, not anything like, double the cost or possibly more. But truly, you ended up probably costing or, actually crediting yourself with maybe not even being possibly 4 times the cost by having done that work. And I think that most wineries are just betwiddled about how much do I spend on fire mitigation versus trying to save some pennies, if not, obviously hard dollars for how much the insurance costs overall are going to be. And we, as insurance brokers, are going to say something that's counterintuitive to what most brokers always say, but we want you to spend more money on fire mitigation. Because the truth of the matter is that we actually, 2 things really bring back capacity and reduce costs for insurance. And those 2 things are fire mitigation and no losses or very low losses. And if the CEOs and the C-suites that sit in New York and in London can see that many more neighbors of Bill and other people in Sonoma and Napa counties and Solano and Lake, all commit to each other and to themselves that they're going to do fire mitigation, so that when these C-suite execs see fires blow through and people have done adequate clearance, so a fire can effectively go through your property because you cleared it like Bill did, and you can just put out spot fires, and your buildings still stand, then they are going to bring back capacity and lower pricing. And so again, the 2 things that bring back lower rates and capacity are fire mitigation and little to no loss activity. And luckily we had, knock wood, a no loss year this year. So for wildfire. So that's significant, and that will help. It's 1 year in the bucket.
Right. And it's a broader brush as well, because all the work that's being done in our North Bay counties, we also have to have that message, filter down into the other parts of California and the other states, because the insurance companies that are providing capacity for the wineries locally are also providing capacity in other areas that are also being impacted by wildfires. So the insurance companies need to find a way to make a profit and not be paying claims year over year to bring back capacity.
Well, as a result of the losses these insurers have incurred, they're starting to use what I'm hearing is fire risk scores to regions in the West. Can you explain how they derive and how they use those scores in making a decision on what to cover?
Yeah, thanks, Bill. If you could put the slide up for the risk modeling. So this is what's driving a lot of the dramatic price increases that everybody's seeing. So technology is evolving and risk modeling is now in the hands of everybody. So your insurance companies have risk modeling softwares, the reinsurers have risk modeling softwares, and there's no commonality between the software. There's no method, no common practice as to what is being delivered through this modeling. But one of the more common risk modeling programs out there is through CoreLogic. And so I wanted to share with you what this looks like. And this is what your underwriters and the senior executives are looking at when they make those underwriting decisions. So this is a property that we all know that will remain nameless in St. Helena, just right off of Highway 29. And you can see on the left-hand side, the little orange balloon shows what this looked like last year in May, or I'm sorry, this year in May. This was, so you can see that the model was 50, and my glasses aren't on, 50. Okay, and then what happens is this is just a snapshot. So every year these software programs get uploaded with the newer data. So when the glass fire data hit this particular risk modeling software, it jumped the risk score to 92. So when we were faced with the renewal for this particular property, it becomes a 92, and this is out of 1 to 100. So severe. Now, obviously the property survived, but the underwriter was not able, because of this risk score, to retain staying on risk. And so they had to issue a non-renewal. So it is, this is what's driving a lot of the exit of the standard carriers that have been providing the insurance year over year. And I think it's just really important that we're all aware of what this risk modeling looks like and what it looks like for your particular property, and that it's going to change year over year. And so again, the story, what are you doing at that property level is imperative to the communications to the insurance market to get a seat at the table for a very costly insurance renewal, but to get the capacity.
Yes. And to Deb's point, so the primary insurers that used to be in wine are, Allianz and Chubb, even Travelers to some degree, Great American, Nationwide, and there were a couple other ancillary other carriers that you would normally see that you might have even invested in as an investor because they're all publicly traded companies. And those primary markets, wine used to be the sweetheart of every carrier, that they all wanted to have a wine program at one time. And at the end of the day, what happened on this risk is this was, of course, a July renewal. The terrible update happened 30 days prior to the renewal. They ended up not being able to have their primary insurer that had insured them for a few years prior be able to renew. So then they ended up getting bumped into what's called the excess and surplus lines marketplace. And that's really where people are starting to see these dramatic shifts in costs, because they went from maybe 20, 30, 40 cents per hundred on their property insurance up to the $1 to $3, depending on, again, wildfire score, but also the story, right? This, as bad as this sounds and looks, we actually were able to negotiate a much better renewal than it might have appeared, despite that non-renewal of that primary standard market. And we were able to do it because it ended up being a story that we could tell of how they survived that fire. And your broker matters. We'll touch on that a little bit, but just a little more color to that story.
Bill, we might want to turn the page as well and look at the property schematic, because
before we do that, when can we go back to that slide? I was just curious, can any of us access this CoreLogic software and look at our respective properties, or is this only available to the insurance companies?
You can absolutely, everybody on this webcast can get access to this information. You can contact us, we can get you a copy. Your insurance company should be able to get you a copy because they're using this information to make their underwriting decisions by. And then we have some software here at Heffernan. It's a little different. Like I said, everybody has a different modeling, but this core logic seems to be the benchmark where most carriers are adopting this particular software. So, yes.
So if you have this capability to check out how does my property score, are there any new things, proactive things that you're seeing people doing to utilize these types of mapping, available mapping systems to show to an insurer that, hey, I may be in a high fire risk zone, but demonstrate that we are a good risk, we are a safer risk, even though we're in a red zone?
Yeah, I mean, that is the keys to the kingdom. We have to be able to share why that property was not compromised by wildfire. And what this software program does is it shows you, the number of wildfires, the number of feet or miles that wildfire was to your property over the course of many, many years. It talks about the slope, it talks about the fuels, and it also is evolving in this year. It's also measuring the number of days for high wind and the intensity of wind. So those are all the things that are being viewed. And so looking at this and then, just double mapping, hey, I've got vineyards. Where are my vineyards? Those were my fire breaks. What have I done to harden the property? All of those things help tell the story back to the insurance company to get that capacity that everybody so desperately needs.
And Ember management is something important too. We'll expand on that later. Ember.
I was just wondering about just again a bird's eye view, an aerial view. Are you seeing any clients using drones, for example?
Yeah, I was just going to say that though. That is the next level because, again, this is just, one brush, right? So we want to have different views. Obviously, the story for the fuels mitigation work, but yes, there are some properties where even a Google image doesn't give a good overview of what's really going on at the property level. And, pictures tell the story. So we've been taking photographs at properties and sharing that as part of our storyboard to the insurance companies. And that drone footage, if you can get an aerial view to show, hey, I've got rooftop sprinklers, here they are. Here's the fuel mitigations work that I've done. Here's where my trees are limbed up. Here's where my defensible space matters. Here's what my property looks like. Then those are the stories that are going to, check the boxes to get back to capacity. Also, something interesting that's happening with the insurance commissioner is everybody's very aware that this risk modeling is kind of driving the exit of carriers away from insuring wineries in Northern California. And the insurance commissioner has said, we have to, if an underwriter is going to use this risk modeling as part of their methodology, then we have to as well identify, what's happening with the fuels work and go through a checklist and make that part of the filing for wildfire. So there is a lot of pressure to change the landscape and not just have this be a one and done. Oh, you're 96, you're non-renewed. You're 96, what are you doing? What does that look like? And with the very, very specific questions that underwriter will be asking and collecting to make that decision. And that's a change that we're going to see very shortly.
Yeah. And Deb, just to layer in, if I may, just kind of what you're saying, because I think you've made some really key points for folks who are listening about, what they should be doing. I think you're sort of running down a checklist of what people should be doing. Here at Lambert Bridge, in that process of that fuels work, we had before and after photos taken of all of the work that was in progress, and all of that went into a GIS mapping system. And so, while maybe not a drone shot, it certainly told a great story of this is what the forest looked like before the work was done, and now this is what it looks like after. And what we did in terms of not just the fuels work piece, but we kind of took it a step further. I kind of took it a step further, is that I actually developed a relationship with a wildland fire company, and actually during our meeting with the underwriter, with the underwriter that came on site, the president of the wildland fire company came and was a part of that meeting. And, he was a great resource because, yes, he's a private fire company. And so certainly there's a cost associated with that. But, at the end of the day, what he told the underwriter was, hey, because we see this work that's been done on site here, I would have no problem sending in a fire crew to help stamp out a fire in the event that happened. And what it does is I thought it gave the underwriter a little bit more ammunition to go back to their team and say, not only has this work been done, but they also have resources in the form of a private fire crew that could help them kind of on speed dial if they needed that. So all of those things, I think they do make a difference. What I would say is that it's going to be an evolving process over the next several years where things will start to hopefully loosen up based on this work that's been done. And by the way, we have it in the budget for 2022 to continue, fuels work, but it's not going to change overnight because, to my shock and frankly horror, the reality of the marketplace as it currently stands is that, you could move heaven and earth and still the carrier is just going to tell you, well, we're not insuring in that zip code, and kind of put a period at the end of that sentence. And that was something we heard a lot of. So I don't want to discourage people from doing the fuels work. I think it is going to be an evolving process. And as carriers come back into the marketplace, if that work's been done, I think your winery is going to be much more set up for success in terms of getting even multiple carriers competing for your business because of the work that's been done.
That's right. That's very well said. I wanted to add one thing that just to sort of develop, and again, there's no crystal ball. We don't know exactly when capacity can come back. We have to, just do our, this Father, Son, and the Holy Spirit, amen, over another positive fire season in 22. But realistically, as you do this work, because many people have done this work, maybe in 20, maybe a bit more in 21, and have committed, like you have, Bill, to continuing the budget for 22 to continue the work. And that's really critical because the truth of the matter is we're still probably at least another 2 years out before capacity does start to come back. And that really, is hopefully borrowing another positive year of no loss activity in wildfire in the 22 year. So that's how far out we are. And that's why we think you really, you don't really want to feel like you shouldn't buy all the insurance that's available. But the truth of the matter is not everybody can afford all the cost associated with that. So going and insuring to what we call your probable maximum loss and investing all the dollars that you can in the mitigation is probably the right balance for how to manage this problem or these issues.
Well, I think that being in the insurance brokerage business, Liz and Debra, your job is to help clients secure insurance. This is obviously a very difficult and challenging market, but one of the comments I heard in talking to clients is one of the most important things you can do is select a really good insurance broker. And could you explain what they meant by that?
But you want to work with somebody who's really doing this day in and day out. I think that, we've really never been busier in 2021 in our entire careers. And a lot of that is a result of the marketplace, of course, but we're also getting a lot of calls and a lot of referrals from wineries that didn't feel heard or didn't understand their messaging, or perhaps their story didn't get told to the market to really represent what's happening. So I think you have to work with people that really understand, what's going on, and that do this day in and day out. This is, if you have an injury, you don't go to a generalist, you go to a specialist. And I think that's something that's extremely important when capacity is really this limited, because it's the best stories and the best consistency with the broker and the relationship and the quality of submission that goes to the market, that underwriter can say, okay, I'm getting another one from this broker, and it does make a difference. And I can share that a little bit more as we move the presentation forward with an example of being able to drive down a little bit of costs, although it's still pretty gross. but the story matters, and
it really does. The story matters, and we do an electronic version of this. It's kind of hard to see it, but it's really the story for a particular winery. And there's several tabs here that just outline, for brokers who are very analytical people, the analytical story that they need to document their file, why they should extend capacity on your winery. And if you have a broker that doesn't know how to put one of these very in-depth programs together, then that's going to compromise your ability to get either best pricing or even capacity at all, or at least the capacity that you need to hopefully be comfortable at night. So that's, we've been fortunate that we've been at this a long time. So we, insure, closer to 200 wineries, and we know how to do this. And the market, to Deb's point, is used to saying, hey, and when you've got an underwriter that has files that are X number deep, so to speak, and they're not on the desk anymore, they're lined up in their email, and they see it from a broker that is knowledgeable, they're going to put that submission to the top. Okay, that means you get to go to the top. And it's not necessarily just us that has that capacity or a capability. There are probably 2 to 3 really, really good insurance brokers in this space. And so if you don't have confidence in that, then you should ask around and see who really is at the top of their game and get them involved in your renewal.
So working with a broker that really understands the industry, knows the cycles, and has really good, strong relationships with probably a fairly broad array of different carriers is kind of my takeaway.
Even in the wholesale market.
Mm-hmm. Okay.
And London.
And London, yeah.
In London, okay. Well, let's talk a little bit about what is a risk assessment, and what's the value of doing a risk assessment?
The risk assessment, I think we've been speaking about as we've been going through this. The risk assessment is really, understanding the risks that can compromise your property, such as the fuel loads, and really, I think the work that Lambert Bridge did, having that right prescription, because you really want to bring in experts to really give you that understand the risk and the amount of fuel mitigation work that really needs to happen to prevent that wildfire from encroaching on your property. And so it's kind of a multi-pronged process. It's not just the fuels work, but it's also, just identifying as well, what assets are at risk. So we have also brought in and doing something new in 2021, and that's insurance to value appraisal. So it's not a real estate appraisal, it's an insurance to value appraisal. And I think, we insure a lot of larger properties, and oftentimes there's acquisitions and things might get missed on a statement of values, on a spreadsheet. Things might be completely depreciated, not show up. And certainly not valued to what they really need to be valued at. And that's replacement costs for like, kind, and quality. And so these appraisals have been very helpful to identify, what's at stake, what are the assets, You look at the fixed asset report, and what does it cost? Are we over-insuring or are we under-insuring? And it's happened both ways. So we've had things that clearly need to be brought up to replacement costs, but we've also been surprised by the fact that everyone's like, oh, it's $1,000 a square foot, so we got to change our values, and all of a sudden something becomes really overstated, because if you're saying, hey, it's $1,000 a square foot to replace this structure, but yet the structure really wouldn't be, because it's like, kind, and quality, you wouldn't put that spend on. Or you're only insuring ground up, so the insurance isn't going to build your new foundation. There's a lot of things that the insurance is not going to cover. So why are you, paying for that in evaluation? So that's part of that risk review, looking at the property, the fuels, what the assets are, what the story is, what are the neighbors doing, and just identifying that as part of that storybook that Liz shared with you.
That's right.
Deb, just anecdotally as well, just on the winery end of things, going through the checklist of things you can do. A couple other things that we did here is there's several of us now that are wildland fire trained.
Yes.
We literally went through a course in wildfire training. Obviously not for something catastrophic, but maybe for something where there is a active spot fire on the property. We have people trained to be able to put that out. We also invested in fire gear, believe it or not. So we have Nomex jackets and goggles and helmets and the proper gear if it came to that. Hopefully it would never come to that. And then we also invested in some hoses and nozzles and some other fittings for the property. And so, in fact, the last few months here, we've actually had an active hose lay around the backside of the winery. And one thing I would just suggest in terms of, Deb, you were touching on, what are the parts of the core infrastructure of your winery that you need to protect. For us, it really comes down to water and power, and I think it probably would for everybody. And so, we have a 100,000-gallon water tank and we have a diesel generator on site, but if the diesel generator goes down and we lose power, then that water tank is really useless because the fire pump doesn't work. And so you just have to think about, the infrastructure of your property and what are the core areas that need the most protection, and then really thinking about is all the brush trimmed away from there? Is it what other things can you do to make sure that if that area doesn't go down in the event of a wildfire? So just wanted to share a few more kind of tips that we've done here proactively.
No, that's well said. And I wanted to just parlay onto that. So one of the things that we were fortunate to be able to do is put on a wildfire mitigation event at Charles Krug, and I think it was in June of this last year. And really, to your point, Bill, it highlighted actually the top 12 sort of best of class fire mitigation, not only contractors, but equipment, I guess is what we'll call it. And so it highlighted, gutter guards, vent systems, sprinklers, all of that. And it also, we were able to bring down, which was very interesting. And I think people will adopt this as they sort of digest cost and how to actually fit it into their budgeting. But there is a company out of British Columbia that brought down one of their fire trucks that actually the British Columbia, their version of CAL FIRE uses them in backup as needed, but they have trucks that they can bring down. You can either buy them outright. I want to say they're about $140,000, $150,000, or you can lease them during fire season for your property, which might make sense. And maybe you get with your neighbors and, you guys, 2 or 3 neighbors share a truck and lease it monthly. But what that allows is, to your point, the issue of, water and power. It comes with 4 different bladders that have up to 2,500 gallon capacity for water. Now, you'd have to put this on property and get that water in place before fire season, right? Nobody's going to be able to get a ton of water just suddenly during fire season or during an active fire. So you'd have to have them strategically placed around the property, and then, be able to, move them as if at all needed, or move the truck appropriately. And that's really been very effective. There's another sprinkler system that is critical that we have encouraged clients to absolutely have, and it's a mobile sprinkler system. And Bill, you probably know about this, but it's a sprinkler system that will shoot out up to 300 feet in a 360-degree direction. They're mobile. They weigh 35 pounds. As long as you've got, adequate hoses to put them up with and hook them up with, you could even do a whole system around the perimeter of your winery and increase.
I was just going to say, I think one thing, and those who went through the glass fire over in Napa Valley are acutely aware of this, is that it's not necessarily the fire front that takes your home or your business down. Yeah. It's that once the fire front comes through, there's nobody there to protect it, and so your home or business potentially would have likely survived that fire front, but now there's a spot fire on your property, and that gets out of control because there's nobody there to put it out, and all of a sudden your building burns down. So I think that's the unfortunate reality of these wildfires. Obviously, that's not the case in every wildfire. I mean, the Tubbs fire was obviously an unusual historic event, but I think the glass fire is probably the best example of things like that happening, where potentially loss could have been further mitigated by having some of those things in place that you described, Liz.
Right. That's right.
So those trailers are really a very nice addition.
Right.
And well said. And there's another new thing that will happen next year, and it's just in the process of getting set up. But it will be able to be activated, kind of like a little bit of what you've done already, Bill, which is having that GPS from the Albuquerque Fire Department, be able to push some buttons, do it all really through the internet. And so if you have to, like you might be seeing a fire coming, it's coming, eventually you'll be evacuated. You could put potentially a fire truck in place, or these mobile sprinklers at the direction that the winds are heading towards your property, and then you can activate them remotely. Thank you for the word.
Yeah, and I think that's a great solution too, and I love that, because that allows you to obviously control it from your phone, and you're actually not in the fire zone, which of course CAL FIRE and law enforcement don't like people in fire zones, period, because they don't want to be rescuing somebody, they want to be putting fire out. So there's obvious safety issues involved in protocols as well. So I don't want anybody to think that I'm advocating for people to, stay on site during, but certainly if you've got that mobile app and you click your fire system on, that might be able to at least wet things enough to keep potential spot fires at bay.
Right. No, that's well said.
Yeah, there's a lot of technology that's available to be used. In fact, I just want to mention that you guys teamed up on a video that I thought was really well done. And so I think it'd like to be able to make it available to anybody that is dialing in today to review, because it talks about preparing your property. It talks about working with your neighborhood. It talks about working with your local first responders. I mean, they're more likely to respond to a site that they know is really defensible. And it talks about some of the vendors and suppliers that can come in and help you prepare your property, so you're prepared in advance. You've got a plan if an event happens. And like you see, we're just saying, there's technology to remotely check the status of your property, or even turn fire protection systems on even after you've left. So
hey Bill, you actually just touched on something that just struck a nerve with me, because it's a great point I don't want to let pass over, which is in an active fire situation, and this will probably come as no surprise to anyone, but they treat, in major fire events, fire departments and CAL FIRE and whatnot treat fire like a triage situation. So they're only working on the properties that they know they can safely defend, and the ones that have been flagged as properties they can't safely defend, they keep on driving. And I think it's important as landowners to know that, because if you don't invest in those wildfire mitigation strategies that Liz and Deb have walked you guys through, I think that you're at risk of having somebody hang a little flag on your mailbox that says not defensible, which, by the way, that happens. No one likes to know that, but it's what happens during active fire once everybody's been evacuated. So, you know, if the fire department knows that in the dark they can get up on your property in the smoke and they can safely turn around and they know where the heck they're going, and they feel comfortable being there, then they're going to stay. And if they don't, then they're going to pack it up and they're going to roll out. And so I think, you know, it's important to know that, I think, as business owners.
That is 100% right. So you bring up a good point. There are three things I want to highlight there. Number one is to invite, like Bill did, the fire department to your property so that they know that they can actively either defend or turn around at your site. So that's very critical. The second is that we didn't highlight something. One thing, we've talked briefly about sprinklers, but there is a sprinkler system. It's not inexpensive. It is pricey. It can go from, depending on how many square feet on the roof that need to be covered, it could go from 300,000 to, you know, who knows, up to $1 million, just depending on the size of your winery. But for most people, it'll probably be around 300,000. But it does create, kind of like, I use this analogy all the time, but it's like Violet on The Incredibles, where, you know, she creates that beautiful little umbrella, so to speak, around her family or herself. And that's exactly what this fire mitigation water system does. And it can actually create life safety as well. So if you by chance have employees on site that are fighting fire and they need a life safety place to go, they can go inside the winery, and this has had proof of concept of being a place that could be safe for life safety. And there is another system that should also be highlighted, and that is for those that may feel that they are just too remote for the fire department to ever find them in an active fire. There is a system that you can spray. Actually, it's developed out of Stanford, and it's just really been in the last 6-9 months, max a year. But it is a patented product that you can spray on prior to fire season. So maybe in like June, at the latest July, and you spray it all around your foliage on your property. Let's say you haven't had a chance to mitigate as much as you'd like. You can spray this material on your property. It has a little bit of a residue on it, so it'll leave a little lighter color on your greens, your foliage, so to speak, around your property. But it will keep it from burning, and it can be inexpensive. It can be like 40 grand that you put in instead of the 300 grand for the Violet system, so to speak. And it really can make a very material difference in protecting your property whether you're way up on the hill or you're not. If you haven't had a chance to do that mitigation, it can be an extra layer and very important layer of protection.
Changing the subject just a little bit, I was thinking of banking. I mean, wineries, growers, we all borrow money to run and grow your business. And bankers typically require the borrower to put up some security, real estate, inventory, receivables, your crop, to secure those loans. And the banks require that collateral is insured. I was wondering, Elizabeth or Debra, have you run into any situations where you've had a client where maybe you've helped them tell their story to a banker? Have you found any situations where the client was in a tough spot trying to negotiate, maybe it was a loan renewal or a loan with a bank because maybe they didn't have sufficient coverage?
Yeah, we recently actually did a presentation to Silicon Valley Bank because They wanted, they're obviously being impacted and have clients that are certainly paying much, much more for their insurance or not having the adequate insurance. So we did a presentation just to bring more understanding as to what's happening in the insurance market and kind of the why behind everything. But very important for that banking relationship to be just as much as a part of the underwriting process, and also suggesting to the banks that, if they can provide some low-cost loans to provide access to funds to help with this fire mitigation, because as Liz and I are saying, we know that this insurance is not affordable. We know that our clients are passing, even though we're working, long hours to bring a program back, bring capacity. They're saying, I'm going to buy this much, or I'm going to pass at this level. So, using the funds to do the fire mitigation work, and to really understand that while it might not be collateralized by insurance, it's being collateralized by fire mitigation. It's being collateralized by that rooftop sprinkler system or some other mechanism that's going to preserve those assets.
Great. Yeah, I actually made some calls to several different banks that actively finance our industry, and it was pretty interesting. They just said, it's not as bad as you might think it may be. One bank said, we have 475 wine industry borrowers, and we've only had 15 that had issues where we had to really sit down with them and figure out what we were going to do. Because as a borrower, you're obligated to, at a minimum, at least have insurance coverage on the collateral for the loan. But some of the feedback I had was that take a look at what loss as a business are you capable of absorbing, and think of that as sort of your deductible. You really want to have insurance coverage that's set up for any type of a catastrophic event. And that banker I talked to also said that they are offering fuel mitigation loans on a 10-year term that they've worked out with a carrier.
We absolutely. That was our recommendation to the banks. Exactly. Great. You touch on something important, and I think we only have so much time left. But it was talking a little bit about, how much really should you insure? Don't insure to the bank, just to the bank line. You don't want to just satisfy your banker. You want to be able to rebuild your winery, if at all possible, and figure that out. And, it's funny because Trefethen did a great job. They were impacted. I forget which fire it was. It was probably 17. Yeah, in 17 fire. But they just, put up a tent. It was a very large white tent. Boy, it got beat to smithereens, but they had it up there for 2 years while they rebuilt. And I'll tell you, you want to make sure that you are able to get back in business, right? So that means potentially moving some of your inventory potentially to less prone wildfire areas. That's another issue we haven't really gone into depth, don't have as much time today to kind of explore that. But Deb has a really interesting slide that touches a little bit on what you kind of mentioned here, Bill, a second ago. And in terms of, do you really take on a deductible, or do you pass immediately the highest risk to the insurer, that first level of coverage? And I think Deb would like to kind of review that program.
If you could just share. Yeah. Oh, I'm sorry. Thank you.
Well, I'm sorry. Just to see the comment I've been hearing, and actually some questions are coming in now about self-insuring and quota share. So this slide really is a great example of how to spread the risk. So go ahead, Debra.
Yes, I'll just tell the story behind this. So this is a Sonoma property. This is just an example of something that took place in July of this year. Again, where the standing insurer, because of the risk modeling, said, I can't do it. I can't stay on the risk. I'm going to have to issue those non-renewals. The risk score for this particular property was 96, a big dramatic jump in 2021 from 2020. So we had to start ground up in a secondary E&S marketplace to build capacity for the property. The premium, I know everyone on the line has experienced similar stories, but the expiring premium for the property was about $138,000. The values exposed at this particular property are between 55 and 60 million. So that is, you know, when you look at your statement of values, kind of the aggregate of the sum of all the structures on that property. So when you're talking about capacity, so we worked diligently, knowing well ahead of time that this was going to be a non-renewal. All we were really able to secure in the time frame that we had was, you know, 30 million. And then 30 million to the let's say the 60 million exposed. So that first 10 million, the first, you know, the ground level coverage is really where it's the most expensive. So that was priced at, you know, 400 to 450,000, coming off of $138,000 property premium for full coverage. So again, you know, with our story, this was sort of the initial kind of out of the gate pricing indications. We did actually get this down to about 350,000 for the first 10 million. And this is, again, this is what's, you know, driving everybody, you know, if this is what's not sustainable. So to say that for $10 million of coverage, that's 350,000. And we say, wow, that was good relative to everything else. But we are hearing now, and we are seeing that, and we're hearing this from other people, that sometimes that first 10 million can cost as much as $1 million.
What was the deductible on this, out of curiosity?
The deductible for wildfire is 500,000. So we're not really seeing any deductibles under 500,000. And, you know, again, we can move that up to $1 million to try to shave off some costs. But where you self-insure is, so this particular property said, you know what, thank you so much for, you know, for getting us to 350,000. That's all we're going to buy. We're, you know, we know that we have risk on the property, but we're just going to take the first 10. And what we're going to do is we're going to buy some earthquake insurance. So, you know, again, people have different risk modeling and different areas that they feel they need to transfer risk to. So they purchased earthquake insurance. They also did a lot of fuels mitigation work that was really helpful to us to get that initial pricing down. But where you self-insure, so here's another area that could have taken place, and we looked at this modeling many different ways, is you can insure the first 10 million, maybe you self-insure the next 5x of 10 million. So that becomes a ventilated layer where you as the property owner say, you know what, I have some risk appetite. As long as ground up, I've got some business income, I've got some revenue that I can extract from my insurance policy to keep me in business. I can rebuild. I'll take that second level as self-insurance.
And maybe put it in a captive, your own captive.
Yeah, you can do that. There's different mechanisms on the financial statement to do that, and you can participate, or you could say, I want to insure 50% of that next level. I mean, you can get really creative with how you want to structure this, and you could, you know, say I want to insure 10 million, not 5 million, and then buy a cap, because the higher you go up, then the less expensive, you know, the risk transfer becomes. And again, just very telling, there's over 10 carriers here to put together $30 million in coverage. So this is also very telling of where the insurance market is. No one is willing to put up, you know, 60 million in limits. And if they are, they've got reinsurers behind them, and maybe multiple reinsurers that are the backstop for that limit that's being provided.
And be careful, there's some brokers out there talking about captives, which we have clients that are actively looking at captive options and the like, but be careful how these captives are structured. Because if they're talking about trying to have a variety or many different wineries share in the same risk, you know, then the truth of the matter is, if multi-billion-dollar corporations have to say, look, we've got to take a linear slice of the pie in order to not have too much at risk, it could collapse a captive very readily if you have too many similar clients that are homogeneous in nature that all share the same risk in one captive. So be very careful of some captive option that's apparently going around right now, because it's more than likely not going to be financially sound. There are ways to incorporate captive, but you have to do it very judiciously and to really examine the option and make sure that it's sustainable.
Great. Very important point, Liz. Thank you. We're close to wrapping up here. I want to just, I guess, close with a question to all of you. Bill, let's start with you. What advice would you have going forward to the audience, given the experience you've had?
I think for us here at Lambert Bridge, it's really just about staying the course, continuing to reinvest, or continuing our investment strategy in ongoing fire mitigation, continuing to enhance the areas that we've already had work done, continuing to invest in equipment, and really becoming as defensible as possible when it comes to, because it is, in my mind, it's not a matter of if, it's just when there's going to be an active wildfire on the valley floor on this part of West Dry Creek Road. So it's a matter of time, and so as defensible as we can be is going to be is what we're going to continue to do, and continue to work with our broker, and and all the advice that Liz and Deb gave is really, it's rock solid, and it truly is about that relationship. And so just continuing to work on those relationships, and hope that things change as we progress over the next couple of years. But certainly it's very difficult and has had a significant negative impact on our operating budget, and so we've had to make cuts in other areas as a result. So it's a challenging environment, no doubt. And
Liz or Debra, in terms of applying pressure, trying to increase the amount of assistance that may be available, maybe it's to the California Ag Commissioner, can you talk, or California Insurance Commissioner, can you talk a little bit about what people can do to help push toward getting more assistance to alleviate the crunch in this market?
I would just say, keep the pedal on the metal. I mean, our insurance commissioner needs to hear from everybody, and he needs to hear from everybody every day. There's this saying, once begun is half done. And there have been some changes, even though it hasn't moved the needle very far. There have been some changes with the FAIR plan, and that's only come because of pressure. And so I think that we have to be relentless. We have to be, the Napa Vintners Association has done a fabulous job communicating to the senators and to the insurance commissioner. And we just need to be relentless, because there are changes that the insurance commissioner can make that can allow for easier filings. There's a whole political backdrop. Insurance companies can say, hey, I can only do this, and they want me to do this, and I need to have a filing that allows me back in the market where I can be profitable. So there's a lot that can be done, and it started. It's just the beginning. So don't acquiesce. This is an ongoing process, and we've made some headway.
Great advice.
It's great advice. And, it's funny, Deb, because if you think about it, all of these businesses in Central and South Florida can somehow magically get commercial insurance for presumably reasonable rates. And a hurricane blows through there quite often with devastating impacts. So it seems to stand to reason that we should be able to, here in California, wildfires are our hurricanes. So
yep, absolutely.
Something should change in that storyline, I guess.
Yeah, so it's called political pressure.
Yeah,
that change the landscape for different. We got to be able to do it different.
Right.
And I think everybody's learning, and we're evolving in that direction. So I'm going to wrap things up here and turn things back over to Amy. I want to thank the panelists for tremendous input and also for our audience for taking time to listen in today.
Thank you.
Thank you.
Right.
Thank you, Bill. Thank you guys hosting. Thank you, Moss Adams. Well done. Thanks.
Yes,
See you
thanks,
too,
Bill, and
Bill.
thank you, panelists, for a great discussion. We could have gone another hour, I'm sure. But I do want to let the audience know that for those of you that are in the Northern California area, we are hosting our Wine Industry Financial Roundtable in person next Wednesday, November 3rd in Santa Rosa. A link to the registration is located right in your console if you would like to join us. And finally, here's a link to an online survey for today's presentation. Please take a moment to complete the survey, as your feedback is very important to us. And thank you for joining our webcast. We hope you'll join us again next time. Take care, everyone.
Take care. Thank you.
Bye-bye. Thank you.
Bye.
Thank you. Bye-bye.